This is LSE Share Talk, and we're joined by Steve Larratt, Mr. ADAD. Hi, Steve.
Hi there, how are you doing?
You've been very quiet over the last week. Me and you usually have a talk, but you haven't been phoning me.
Yeah, unfortunately I came back from the trip up to the big exhibition up in London, and unfortunately I got myself into a little spot of bother with a little illness. So I've had to sit around for a week, not talking, not doing anything, and spent a day or two in the hospital.
Good, great.
So, yeah, I'm on the mend now, though. I'm 95% back to where I should be.
So what was wrong there, like? What happened?
Basically, I got back home after the trip, and I was just sat around getting very hot, and I just went to sleep for a day and a half, woke up, and straight off to the doctors. They checked me over, and I actually had a split tonsil. So I've literally been dosed up on medication and everything like that. So
all right.
Yeah, out of hospital now, back to my normal self, and thankfully it happened at a point in time when there was not a lot of news happening with 880 and or other companies. So it was a good time to get ill.
We had, I must admit, we had a good time in London. It was lovely to meet up with you at Wayne Shaw, my momentous event.
Yeah, it was very good to meet up with the LSE Share Talks crew, and obviously met up with a lot of very influential people up there. So CEOs of AFPO, and managed to catch up with a good friend of mine now, Steve Stavely. So yeah, it's looking very good for the future, and can't wait to get along to the next event, whenever that shall be.
I think Wayne's arranging something for the summer. I think I'm not 100% sure, but it was so well attended. I think he's going to have to get a bigger venue.
Yeah, I've heard through the grapevine that he's looking to do sort of more regionally based sort of meetups.
All right.
So potentially, for instance, one up north, one in London, one in Bristol, just so that it's sort of more localised to the people, because there is the demand there for the tickets. So it's obviously just down to venues versus where people live.
Yeah.
It's a thoroughly exciting concept for the future. And again, Wayne does roughly the same as what you do yourself, Alex. Just obviously allowing the private investor to get out there and meet the people that are asking for the money. So it's a great go-between, and it's a brilliant resource to have and be part of.
Yeah, I agree totally. I think it's really good that normal investors can meet up and sort of talk to each other and meet the companies. It's a level playing field, that's for sure.
Definitely, and it makes you realise how sort of human these people are. 1 minute they're running a multi-million-pound business, and then the next minute they're sat there talking to you and having a glass of wine with you. So it's a brilliant little get-together. Exactly.
Just to run this past you, I don't follow them closely. 88E Energy, the RNS that brought out last night, the project Icewind permittable exceeds pre-drill expectations. Can you talk about that?
Yeah, I've had a lot of people obviously contact me via direct message today and said, what does this mean? Effectively, the way you've got to look at a shale play is a bowl of cereals. 1 minute you've got cornflakes, then your next bit of shale could, for instance, be shreddies.
Yeah.
What you've got to think about is the porosity, which we know is around about the 12% mark, is almost from my opinion, like a shreddy. It holds a lot of fluid within the rock, but there's quite a lot of gaps within the rock. Now, what they've released last night is obviously, it states that the superhighway permeability numbers are 20 times better than the pre-drill forecast.
Yeah, yeah.
Now, what they were saying pre-drill is obviously they're looking for this vapor phase. Now, with this news that came out last night, effectively what it means is the gap between the shreddies is large enough for the oil to flow.
All right.
Now, based upon pre-drill expectations, they were expecting round about sort of $50 per barrel to extract the oil from the shale. So with the news last night that it's 20 times better than expected, that to me is basically saying, again, this is sort of reading between the lines and looking at other companies that have gone into the HRZ for the shale, and it's going to come in at below sort of $40 per barrel. Now, I have said on previous podcasts that Otto and Great Bear have obviously set a price, and when Otto put out their presentation at the end of December, they said that it was going to be financially viable to extract at that price that was set at that point in time, which was $37 per barrel at the end of December.
All right, yeah.
So this sort of reaffirms what their finds are and what they've said. And again, looking back over my data set earlier on today, I've always said that the data shows that either the porosity is going to be off the scale, which it was, or the permeability is going to be off the scale, which obviously today they released it very much is. So from my point of view, if we're sort of more akin and we're obviously in the sweet spot as opposed to the Otto area, if they could extract economically, as they put in their presentation, at $37 per barrel, we could very well be below that. Now, what this means going forward is cheaper rigs to set up. They can use a wider spacing between the rigs. So again, getting the permits up to speed, the overall cost, just the benefit itself is going to be absolutely phenomenal. And again, mentioned in the RNS today, the independent resources report is going to be due out within the next 2 weeks, and that's going to be the big eye-opener for a lot of people, and that will obviously give all of the investors of 880 the oil that's in place. And again, they're not using the lettering that I assume they would, which would be the competent person's report.
Yeah, exactly, yeah.
So I'm expecting Paul Wazinski to put his name to it, hopefully. He is one of the only few people in the world that can get their head around what the play is and obviously what the resources would actually show and what that means. There's no point them giving a data set to a company and saying, you tell us how much oil we've got in place, when what we're looking for and what we found is totally off the scale of what Paul Wazinski was looking at. So this has got to be a large proportion of his work, his interpretation, obviously from the lab results. So I think there's going to be a lot of people, and it's going to turn a lot of heads when that independent resources report comes out. And again, it's only 2 weeks away, as per his RNS. So I think the time to potentially sell is definitely not now. And I think as when that comes out, a lot of the big sort of institutional investors will be starting to jump on board and load up. So it's very, very interesting times ahead. They're already getting down to business, and they've already put permits in for the Icewind 2 drill. I believe it's going to be on the same ice pad as has been used on Icewind 1, and they're going to keep it to a vertical drill as opposed to a horizontal drill.
Right, yeah.
Because they're designing it based upon known facts so far. They can then obviously get a decent fracking fluid together, and it will need minimalistic stimulation. This well, if they've spudded a well now to produce, I believe from the data that I've got that it will actually flow like a conventional, but on a very, very slow and very, very low barrels of oil per day. But that flow would be sustained for extremely long lengths of time as compared to a lot of other shale plays. But with minimal stimulation, the flow rate will be better than any other shale play, and the extraction rate will be a lot more oil over a shorter period of time.
Oh.
So ongoing, it will be an absolutely amazing gameplay to whoever the joint venture partner is that comes on board. And obviously we will know about that in the sort of mid-term as well. So if they've obviously designated permits for Icewind 2, then sort of again reading between the lines, they all must have sat around the table with the potential joint venture partners and got some sort of agreement sat there already to warrant putting the permits in for the placement of the Icewind 2 drill site. So I believe talks will be obviously ongoing still as to dot the I's and cross the T's, but I believe they're a lot further along than a lot of people potentially will care to guesstimate.
Definitely. Well, you know yourself, Steve, these companies, if you've got a business model, you've got to look ahead. The same as I work in the oil and gas game, everything's planned 1-2 years ahead. But the question I would ask you, looking at this RNS that came out just after midnight last night in Australia, it says 20 times better than pre-drill forecast. Can you explain that, please?
Yeah, I mean, literally, pre-drill forecasting, they'll have certain models in place, and based upon Paul Brzezinski, he was expecting, you know, X, Y, and Z.
Yeah.
Now, obviously, there's a great amount of data that's out there on other drill sites nearby. They've said that it's akin to a drill shale play area elsewhere. So basically their model is based upon predictions. Now, Paul Brzezinski is at the head of his game. There's no other person like him out there.
I agree, Tom.
And yeah, definitely, you know, he's basically a messiah or a Yoda of finding this sort of resource.
Been there
now, for that's it. You know, this gameplay that he's doing, he's been at it for 6 years now, and you know, for the company to come back and say it's 20 times better than expected, that just shows, you know, they're expecting a tight shale that holds an extremely vast amount of oil in play. So for them to come back and basically say that the permeability is 20 times greater than expected, that is just unheard of. You know, that is almost like saying, hey, everybody, sorry, we messed up. We haven't got shale here. We've actually got oil that flows. So, and that's what it's akin to, you know. It's almost like someone saying we've now got an engine that runs on water, you know, as it's just from that one statement. Again, can you put a figure on it? No. They've obviously gone to the labs have come back and they've said, hey, we can't work this on normal scales. They've unfortunately had to do it with the porosity, and now they've had to do it with the permeability. This gameplay is unheard of. It's not written anywhere in black and white. There's no test scales, there's no models out there that can predict what this, you know, the Independent Resources Report will say. This is going to be an absolute eye-opener in the wonderful world of shale play, and it's definitely going to be hats off and pats on backs to Paul Brzezinski and Dave Wall. And when they flow test, obviously, Icewind 2, it's just going to be off the scale. It's going to be an absolute amazing oil extraction program. Joint venture partners are going to be falling over themselves to get in at this shale play. Obviously, they've still got the discounts in play. And as from the end of this year, there's going to be extremely low-cost loans that are going to come into play from Alaska. So again, fundraising as from the end of the year is going to be a long-gone memory for companies that are looking to start producing.
I've got to pick up on this news update in the RNS today. The reason the markets didn't basically, when you look at the SP today and looking at this, I can understand why, because they're not giving any figures for some reason. I don't understand that, and that's why the share price never reacted today.
Yeah.
Bizarre. It's absolutely bizarre. Why have they done that?
Practically speaking,
yeah,
because they can't measure it. They can't, for instance, say what it's going to flow like, because there are no other models out there to predict it. There's nothing to base it against. You know, if I said to you, you know, I've got a fish here on the end of my line.
Yeah.
If it's pulling at a certain sort of weight, you would expect that fish maybe to come back and weigh 10 pounds. However, the fish is actually swimming with you and helping you up. All of a sudden, you've got a 100-pound fish on the line. There's nothing to say what it is. There's no scale to put this porosity and permeability up against a shale play.
Yeah,
I've said, and I've put it in writing, that this is going to come back 30 to 40% better oil in place than Eagle Ford per given acreage. Now this is pointing to 50, 60% better flow rates for a easier sort of solution to put in to stimulate the well. So if you imagine, let's say we had two exact gameplays. One's flowing at, say, 100 barrels per day with no extraction, no stimulation. So it's just flowing at 100 barrels per day. Exactly the same play, but here you would get potentially 300 to 400 barrels per day without the stimulation.
Okay, yeah.
Plus more oil in play. Now, what they're basically designing now is the fracking fluid for the well. Now, if you go back to the first instance, if they stimulate the well, it might go from, say, 100 barrels to 1,000 barrels per day. So, tenfold increase. With the permeability the way it is with the grill at Icewind, what they'll be doing is they'll be looking at the fluid and they'll put the fluid down into the well, they'll frack the rock. Now what's going to happen, because it's flowing at such a high rate initially, what they will need to do is, for instance, fix the flow at exactly the same as the example model. So they might say we need this to flow at a maximum of 1,000 barrels of oil per day.
Yeah.
So that the well obviously remains open, the well doesn't collapse back in on itself, and that's what they need to design. And that's the need for the lab results and the tests coming back. But what you're going to end up doing with that first well, for instance, Eagle Ford, they've got a spread around about 40 acres per well. I've said it previously, and I'll say it again, with the probability and the way that the seals are in play here, you're going to be talking about, per well, probably 80 to 120 acres per well. So you're going to be talking about a third less wells, but each well is going to be producing 2 to 3 times more oil than any other given shale play. So your setup costs are less, the oil will flow out the ground a lot easier, the stimulation will be minimalistic, environmental impact therefore is going to be a lot less. So for a joint venture partner, it's almost as perfect as it gets.
So the next question I've got to ask you, you've covered that. Are you okay, yeah, with them tonsils?
Yeah, I'm okay. Yeah, just
right.
Little go for drink.
This is, by the way, this is a silly question, but what do you see the future holding for 88E Energy?
Now, I've always come back, and again, I've put the figures out there based upon weight, based upon total organic content. I'm expecting, within the independent resources report, 3 billion barrels extractable over our land.
Good grief.
Now, and that's the extractable amount.
Jeez.
Now, they've come back, obviously, today, and they've actually put it in there, saying that it's going to be including the additional acreage from the purchase that they've done back in sort of late last year.
Yeah.
So what that figure's going to come out, if it comes out anywhere near my figures, I will be a very, very happy person. And all you've got to do is think, if a joint venture partner comes on board and says, we'll cover all the costs, we'll prove up the land, we'll take 20%. Now, they've got 2D seismic, which is already underway, and they're nearly sort of a fifth of the way through shooting. So we could have potentially conventional to find on top of that resource amount that comes out very shortly. Imagine, if you will, if they come back and say even 1 billion barrels in place, if we get a 20% joint venture deal on that, and that's just on the current acreage.
Yeah.
If they come back and they say even $40 per barrel, if we're looking at 1 billion barrels in place at 20%, that's 200 million barrels. And then what you've got to do is think, if we get 20% of that, and the price of oil obviously over the time of extraction, let's say it's at $70 per barrel average over the next 10 to 15 years.
Yeah, exactly, yeah, good shout.
You're talking $30, maybe $40 per barrel pure profit on 200 million barrels, and that's before we have the potential to buy additional land.
Mm-hmm.
That's before any conventional play, and that is based on 1 billion barrels. So imagine if they come back at 3 billion barrels, and that figure I've worked out is only at a 10% extraction rate, and I'm expecting somewhere between 25 and 35%. So we could, big word, could potentially be sat on 8 billion barrels extraction rate. So then imagine if they came back and said, we've got a couple of billion barrels of conventional on top as well. This could be the next biggest oil company on the planet.
You've only got to look to see what's around you. You know, the companies around you and that acreage.
Yep.
Not that I follow
Yep.
it as a close story, but you look around you. It is a good story, to say the least.
Prudhoe Bay up the road from us,
Exactly.
15 billion barrels.
Yeah.
You've got Armstrong sold off to Repsol. Repsol have hit 16 out of 16 conventional drills, and they're sat on 1.6 billion barrels. We are in the better fairway, if you like.
Yeah, exactly.
We are sat on the thermal mature sweet spot. We've got porosity off the scale. We've got permeability off the scale. That independent resources report will put a factual figure of the amount of oil we've got in play just on our little blob of acreage. We're only talking an acreage size the same size as roughly Dartmoor.
Yeah.
So if you look down at the southwest, it's not a massive amount for the amount we paid for it. You know, 7 million, I believe it was, that is needed for the additional land acreage. So there's chances there, any joint venture partner coming on board, we could just buy more land, double up the acreage. If we double up the acreage, we could go from having a 8 billion barrel resource up to 15 billion barrel resource. That's the potential here. Now, imagine if we even got if that came to fruition and we even got a 10% joint venture deal at 15 billion barrels in place. That's 1.5 billion barrels times $40 or $50 per barrel. You could be talking a several billion market cap overnight, and that will take 880 off the AIM and very much firmly into a FTSE 100 index company. And it will only take us a very short amount of time to get us there in the grand sort of scheme of things.
I must admit that I've got to come in here. By the way, I agree totally with what you're saying. You know, the prospect of the acreage, and you look at the RNS, 20 times better than the pre-drill forecast. But I've got to comment on this. I find it quite amusing when I look across social media, Twitter and so on, and people say, you know, we're going short on this share and short on that. It's absolutely bizarre because we know they're not. We know they're not. There's no liquidity in the market for them to do this. So I don't understand why they do, why they say that on Twitter.
Yeah, and I've asked people, people have come through to me, and asked, can you actually short this share? And I've rang around several companies, several sort of spread bet companies, and they've said, no, we haven't got any sort of liquidity in the market to do that. Even today, where the share price has dropped, they are still sort of 70% buys, 30%. The market makers do not know how to put a price on this company. And, I've even had people on charts come back and say this will not rise when it was down at 1.2. Lo and behold, we're up and over 4.
Oh, man.
I've had people come through and say, oh, it's going to drop tomorrow, and then it's jumped up, So, today it's been a very small drop, more buys than sells, and, the company just cannot be valued at the moment. No one knows how to value the company because no one knows what to model this company against. And the first thing that they're going to have is that independent resources report. And if you have a look at other companies, I'm not going to name names.
Yeah, of course, yeah.
This is just down to other companies when they've obviously put out the independent resources report. The price of oil round about the $35 mark. This could potentially go up between